Okay, so let's do a recap on the day. We had small green today. Not quite what we expected. Made some mistakes. Let's review what we did, and what we should have done. Okay. Looking at all-time highs. We'll create new all-time highs during pre-market. This indicated to me that we had a jagged bias up. Engineered liquidity for sure told me that this was likely going to return here, especially since we were so close to all-time high. Retracement to the 50%. This could have been a reasonable trade going into 9 o'clock. To the 50%, and then monitor. At least get in here. Maybe somewhere around here. Let's think about that. Definitely something to think about. Balanced price range would have been concerning, but immediately disrespected. Down to the order block, which immediately gets invalidated. Creates some very bearish PD arrays here with the bearish breakaway gaps, excuse me. Take that all the way down. At this rate, I don't really want to trade anything before 9:30. All right, so rapidly approaching 9:30. Let's see what we have. I definitely wanted to see it go up. I was thinking it could come down since all of our areas were down here. To grab liquidity, we had this midnight on top of this Tokyo stacked above this Euro sessions first presented fair value gaps. So 3 in this area. I thought this was going to be a very strong area. Thought it would maybe at the very least come down and bounce up. Worst case scenario, go down to Asia. London low, maybe even Asia low, but I didn't think it would get that far. I had put some lines here. I thought it would take liquidity from either this level or maybe this level, or maybe even one of the fair value gaps along the way. I was looking for that with the interest in bouncing back up. Now, what actually happened, spoiler alert, it just 9:30 melted. So I was looking at this, I said, okay, well, it's still looking for liquidity, and that's fine. So I let this candle print. Sitting on pins and needles, sitting on my hands, let this candle print. I should have said this candle is almost 50%, but instead I said it couldn't make it to 37.5. Granted, it was only the first candle. So, still waiting. Second candle, what do we see? Okay, we create a fair value gap, not the first presented, but a fair value gap within the ladder. So this would have been a primary rejection point. Having said that, I said we're still rejecting the 50%. What I should have said is, well, we created a lower low. This is a lower low. I know the wicks just do the damage, but it actually went, the price showed an interest in going lower. So this should have told me, even though I saw it closed green, and I said, let me try for the long, I should have said the low makes more sense because we're at least trying, even if that's just, I said, I did see that bullish order block. I said, let's do that. But in reality, I should have either waited for confirmation or gotten in for the next, for the short. This would have been an ideal short entry off the top of this. I would have needed to see this invalidate, but that didn't happen. So realistically, I should have waited one more candle. One more candle, what happens? Okay, 2 more candles. We are clearly doing less damage on this side, although we're doing less damage on this side, which is why I didn't exit immediately. I said we were respecting this order block, which made me think maybe there's a chance we're being bullish, especially considering the fact that we rejected the 50%. The reality is, yes, we were moving up, but if the bodies are telling the story, this is equal. So there's no story being told. Technically, I should have waited for more confirmation. One more candle. Okay. This still doesn't tell me anything. Realistically, it still doesn't tell me anything because we're right in the middle. I was concerned that with this strong area here, there was no chance we would make it past, so I wanted to get in. Realistically, I would have to see it come down here in order to feel that way. But 50%. If we make it past here, there's a chance that we continue to go to the south side. So the question is, right here, what do I think? I think we can't make it outside of the ladder, so we probably should make it back down. If we can't make it out, we might as well go back down. Maybe put my stops close, if at all, because I would need to have a stop realistically here if I'm bearish at this point. I would need to, and I did have my stop pretty close for the long. I was in maybe somewhere around here. I had my stop at about 50%, something like that. Actually, no, I put it here because if I said if it goes past this wick, we're definitely going down. So that was my structure. So now, only thing I should be thinking at this point is bearish. I know that this is a strong area here, and this would have concerned me. But the fact that we can't create a higher high, and we're already going lower, shows me we must be bearish on some level, even if it's just to here. And we create not only a oh, okay. I don't know what that was. We create a lower low, which is still bearish to me. I see. And we keep going down. So now, in the process, we created, I see, this is NQ, that's why I should be doing this on, it's fine. I think on MNQ, no, this is fine. So we're continually going down, and wouldn't have seen any drawdown if we got, and we might have seen minimal drawdown if we got in on this candle at the break of this low. The break of this low, especially at the 50%, would have seen minimal drawdown. So I would have been biting my nails for a little bit, but then print right past this area. And then we create our first presented fair value gap of the session, which is superimposed on top of the midnight, the Tokyo, and the Euro sessions prior first presented fair value gap. So this is an extremely strong area here. In addition to that, this is a bearish breakaway gap. So this is a strong area. I have this every reason in the world why any entry here has any entry right here should see no drawdown after entering here. Maybe even for the rest of the day. No drawdown. Exit the gap smoothly. Come all the way down here past Sydney. First presented fair value gap. Stall a little bit, but not really. And then you take that to yesterday's PM first presented fair value gap. Now, if you took that off the rejection of this or this. Let's say you got in here, 80, take that to here, boom, over 100 points. Now, if you took it earlier, did a little bit better. With that in mind, what we do is we put our fib on, because that's our new tool to play with. And from there to there, you say, well, if I want to stay in this trade, if I'm not comfortable with taking that amount right there and stopping, where do I want to see it retrace to? Well, it doesn't look like it wants to retrace. It just keeps going back down. So in reality, maybe you would have put your stop somewhere around above maybe just in profit here, just so you don't lose anything in case. But if you do that, you run the risk of getting taken out. So comes back. So the reality is, maybe if you're in here, then maybe you just let it ride. I would probably put my stop just above this area because of its strength. I don't want to see it. I barely even want to see it touch the consequent encroachment, which it actually does, which is amazing because this happens to be the consequent encroachment of the session first presented fair value gap plus the 50% retracement according to the Fibonacci of the session of the dealing range so far, on top of 2, 3 prior first presented fair value gaps. This is the strongest session here. There's no reason why it should print past anywhere here. I'm surprised it even made it to the consequent encroachment. If you look at that, you're right there at the consequent encroachment of the session first presented fair value gap. Absolutely beautiful. And then you probably have even a limit order there and just watch it, boom, it falls. See, you print inside barely, and then you're immediately out and rejecting. Another perfect opportunity for an entry for the short to the downside. Now, where did I go wrong? I saw this big move and said, well, what if that's the Judas swing? If that's the Judas swing, then we should be looking for longs. But the reality is I should have put the fib on and seen that even if it were the Judas swing, I would need to see it print past here. And I didn't see anything print anywhere close to past here. So what happened instead? I was looking for the long from down here. I was looking for a long entry. I think maybe I got in somewhere around here. Maybe. I don't even recall. I didn't even take this move because that would have been a decent move, in all honesty. 979. You still could have made easily 100 points off of that if you knew what you were doing. The rejection of this first presented past this, which I think I actually got chopped up in some of this movement. I needed to get in at the turnaround here maybe, but even this wouldn't have been an ideal move. I was panicking, looking for my move before it presented itself. The move was here. From here, well, see, actually, boom. So, boom, right here is your 50% of the range. So it goes a little bit past, approaching the OTE, not quite there, but it's fine, because if it's rejecting and it can't even make it there, it's clearly coming right back down, especially since it had the strength to make it down here. And we already covered how strong this area is. So we fall back down from here. Sure, you're thinking this might be an OTE for the long, right? But you can't even make it past Sydney. And then you melt. So this served, and Sydney then got strengthened by this area. Couldn't even make it past here, and now you can't even make it past Sydney. So what does that mean? That means that even if you entered here, you actually probably made even more. So you take this down, even if you take it to the first presented down here from NYPM, or you could take it and leave it and get out down here somewhere, because I think your drawn liquidity ideally would have been somewhere down here. I think I have a primary DOL right here. 808. I don't even know if it came to touch that, but let's see. It looks like it did not. Honestly, you should have been done trading for the day by now. You go and spend time with your kids and hang out on the beach, have a pina colada, something like that. Okay. Look at that. Optimal entry for the short. Honestly, I don't even know what I'm thinking at this point. I'm thinking probably maybe continue to the downside, but realistically, I should be done trading by this point. I did see that. So it's two things I'm thinking. Yes, it can't make it further up, so I'm still thinking bearish, but I'm also realizing this could be a sweep of that low. So I have that in the back of my mind just in case this does move higher. I don't want to see it come up here. If this comes back up here, then I have to see how it treats that area if it's going to come in for the downside. I also move my fib over here and see what that does for our dealing range. Because now that says we shouldn't come up past here. I don't want to see anything come back up here. If I see something come past here, if I see anything higher, I start thinking about whether or not I'm changing my interests. Do I have a bias of short or long for the day? I don't see it come up here. I'm not seeing it come to Sydney. And instead it comes back down. Prince passed. I want to see it make a lower low. See, this looks more to me like a sweep of that, and then a resweep, which it would indicate to me that we're still bearish. Okay. Still bearish. Might even be interested in taking this move right there just to see if to test it, see if it comes down a little bit further, maybe to there. Yeah, I think I called out that I had missed this move earlier today. It swept this intermediate term high, which was a clear sweep, plus rejection of this yesterday's NYPM first presented fair value gap. This was a beautiful trade here if you weren't already in one still. Boom. Almost 100 points. Is it almost? Let's see. If you take it off the CE, boom, because you can't print past it. And as ICT would say, you print a little bit outside, which is what you call a little mohawk, but the rest of it can't. So boom. Rejects high, sweep, boom, in. Maybe put your stop at previous week's high if you're feeling froggy. In at the consequent encroachment, 972. Alright, so you can't quite make it to the 100, but still beautiful. I don't like that it's not making lower low, so I would need to have been out by here. And at this point, after this sweep of this intermediate term high, it definitely turns bullish. You would need to have been out by here. By here for sure you need to be out. So let's say you get 70 points out of that. because it starts getting squirrely, starts getting very squirrely. Could you have taken that? I don't know if I would have been interested in that, especially because considering here I had a primary draw of liquidity, I think was here. I was looking for a 10 a.m. low. I wanted to see it come down here, which was this one before. I guess that it missed it twice indicated to me that we are probably not as bearish as I wanted, as we would have needed to be in order to get down here. Missed it twice in a row. Swept and missed. So bullish, I suppose. Create a new intermediate term high that is below. That's higher than this. So now we start. Okay, let's try that again. We created a higher intermediate term low than our long-term low. So this turned this into a long-term low. On this move, rejection of this balanced price range, but this is our new low because it immediately turns around and starts testing it again, and then it validates it. Well, sorry, the wick invalidated because it didn't stop at the 50%. The consequent encroachment. So, definitely bullish here. Maybe even try the long here off the rejection of this first presented fair value gap, considering, honestly, this could have been a mohawk, honestly. I would need to see this rejection here. This would be your entry right here. Creation of a breakaway gap in the process. I like that. And then what happens? Oh, so if you got in here, you see that you wicked into this bullish breakaway gap and shoot off. Wick, wick, wick. You can't even close inside of it. That means you're clearly bullish. I would take it to Sydney and panic. Or I would get stopped out. Or I would let it go, especially considering that my stop would have to be below this first presented fair value gap. And you only wick to the consequent encroachment, which means you're still bullish. This concerns me, but honestly, I would love to take it to that Sydney. And that's actually some really good chunk of points right there. Let's see. Okay. Hey, there you go. I'd start trailing it rather gently or maybe put a stop at Sydney, honestly. Boom. Yep, and that's why you take it to Sydney. Because if you don't, you get taken out. Honestly, taking it here off this rejection to the downside would have been a nice way to play this right here. Boom, boom, boom. You do that, you're rich. You're rich just doing that. What happens here? I don't know. Rejection. I was thinking long, but that said no thank you. My. Okay. All right, so what did we say? We wanted to see, so here we go. We increased our dealing range to here, which was the low of the day. And then, what do we do? This is the blue one. This is the blue one. What do we have here? 50% on top of Sydney. Wick rejection. Boom. Perfect trade. Look at that melty melt. So what do we have here? We take that. I think we just missed, if I remember correctly, the consequent encroachment of the Sydney first presented fair value gap by about 1.75 points. So what do? You counteract that. You put your order entry at the base of the fair value gap, not at the consequent encroachment, because that's how you miss your trade, and then the trade runs away without you. So put your stop maybe above it, maybe whatever closest PD array you could find, but it doesn't look like there's anything, so honestly I'd probably put it at maybe inside. I mean, I don't know, I'd probably put it inside. You wouldn't see any drawdown realistically because it was a wick through. So if you look at this, the body of the prior candle barely, maybe enters. Nope, you don't even get a body entry on this fair value gap. You have a wick through, so that's why, boom, bodies tell the story, wicks do the damage. What's the deal here? You put your stop right here, right outside of it. What kind of drawdown is that? An eyelash width of drawdown. So, yeah. All right. So then what I did was I used this fib for I call this my afternoon dealing range because this is where it wicked and then fell. And this was a beautiful trade if it were taken. Let's see, where's the top side? Oh, it would be there somewhere. Cool. So I wanted to see, now I'm looking at the gold fib. I'll put that one back on. Let's put this off the screen for now. All right. Wanted to see what the gold fib looks like. Because this is my new move. I want to see where it retraces to. I'm saying maybe it retraces to about this area. Again, on yesterday's NYPM. So we're also getting close to 130, so this might disappear. So it might not have any value. All right, let's see. Do we invalidate this breakaway gap? We do. Right here to yesterday's NYPM. Plus we have equal highs right there. We're trying to create a new NYPM first presented fair value gap. And we succeed. What happens? What happens here? We create a low. We go right past it. Okay. And then, after we go right past it, we print right through it straight to this breakaway gap. This bearish breakaway gap. And then what happens? We reject it. And we print lower. But notice, this low is much higher than this low. So honestly, what I'd like to see is us reject this reject this to go bullish and reject this to the upside one more time. So it does that right here. I'd like to get it on this candle, put my stop right here. Let's see what happens. Aha, beautiful. I like it. I like it. I like it because we did not create technically you should put your stop here, but I didn't want to see it come this far down. I didn't even want to see it come this far down. I want to know that it's ready to run. It already created a higher low. It's also created a higher high. And that's what I want to see. I want to see it move in that direction for the day. Comes back down, and our new low can't even make it to the first presented fair value gap. If you're not already in this, you should be. Take this at least to Sydney, maybe even to the org, to the ladder. And what do we do? Boom. If you took that from here, boom, boom. This might have been premature, but too bad. I like it. Honestly, this would have been ideal, but who knows how to do that? I wouldn't have been able to do that. Would have been able to do this. Put my stop there. So get in here off the rejection. 20-point stop. This is 70, wait, 981. Okay, nice 60-point trade, like that. Trail it nicely, maybe 3 candles back. Or you could even take it to the gap, because this is a nice rejection. I probably would have been looking to get out here, honestly, at the gap rejection. Oh boy, okay, well, comes back down. You could try to stay in that trade, but I don't feel comfortable doing that. You can't even make a higher high. This is telling me we're bearish. Plus, we can't break into the gap. Definitely bearish. We didn't even have a print inside. Absolutely still bearish. Looking for it to come down. If I can get in as high as well, but we keep trying, which is concerning. We keep trying. Oh, see, we do wick in. So if I did try to get in for a move, I would have been taken out already if I didn't get out at the rejection of these bullish breakaway gaps. Let's whip out our fib and see what we've got going on. All right. So let's see. This was our afternoon. So I would turn this over because this doesn't mean anything to me anymore. Then I would start by looking here. We see we come down to 50%, and then we go up that way. Because this, so what made me think to turn this around? Came back up to the 50%, didn't have much displacement. Not only did we not have much displacement, we started going higher. I need to see some displacement in order to think that we're going lower. So if we're not going lower, maybe we're going higher. So what do we do here? Come back. Can't even make it to the 50% before we shoot up. Make it here, retrace the 50%, shoot up. Can't even make it to the 50%, we shoot up. So we're still quite bullish if we're not even making it to the 50% of the range, despite how far down we go. If we look at this a different way, see we already made it to the 50%. So we're definitely looking bullish. Any pullback to me says we're still quite bullish. Because any retracement is not going deep enough. It's not going deep enough. Okay. Now, if we were to take it from here to here, I'd need to see, and we get our 50% retracement, shoot back up. Can't make it to 50% still. Maybe we're still bullish. Let's see. Let's see. It's not going much. Okay, there we go. There we go. Ooh, double bar reversal. And we're trying it again. So we're still bullish. Oh, and we break into the gap finally. And we use it as a sweep. What happens after we sweep? We resweep. And then, do we go for the re-sweep? We do not. We go back down for more energy. Definitely should be, and we're actually, it's done 4 p.m. We can't trade anymore. So that's our recap for the day.